Siddharth Sedani, Assistant Vice President Advisory Sharekhan, is now joining us. Siddharth, what do you make of the recent correction that we are seeing? Considering the earnings, we are at least fairly valued. The downside from here on is limited for the markets on an index level.
Good afternoon. See, downside is limited, yes. The kind of fall we have seen, I think that kind of a magnitude fall will not see in the markets. Hence, we would not able to rule out the complete deletion of falling down from here, at least of 5% or more. But what we believe is upside is much higher than what downside has been seen. Altogether, markets can be a little choppy, can be in a range, is just because of global cues, and earnings season has been more or less in line, but we have missed the earnings altogether, because if you talk about the top line, it was a miss. If you talk about the bottom line, it was a miss. Just a margin which was seen improvement in most of the cases. But having said that, what we believe is market would be range bound. I think there would be not exceptional triggers coming into the markets. Hence, we believe budget is there in front of us, but we don't. Market don't believe that there would be any exceptional leeway in the budget. Even government doesn't have much of a leeway to give any kind of a surprise.
Right. Do you think that markets have become very pessimistic? Any positive news, whether in the budget, something from US, something coming in from China or Europe, would be cheered quite a bit?
Yes, of course, because because market is somewhere discounting the budget woes also, because government would not able to act that great differently or can give any surprise. And if any corner of the world, like global cues, China, US, or so-called in the domestic side budget, or GST passing through the budget session, I think that would be quite a good surprise for Indian markets, Indian equities, and we may see quite a good jump from here on. But I think there is little room for surprise.
Right. What would you look at in terms of the PSU banking space with what's happening over there? Something like a Bank of Baroda, which have taken the entire hit and said that they would not need equity. You think that name would outperform because it doesn't need equity, and at least it has taken all the hit that was needed?
See, we don't believe that once said is done. Is just because of we would like to wait and watch and look at the results coming forward in Q4 also, because as the management has commented that they have met the notification done by RBI. So we would like to see what are the fresh slippages coming into the fore for the Bank of Baroda in Q4. Along with that, liquidity situation, yes, Tier 1 capital can be quite strong. Their capital adequacy could be quite strong. But I think asset quality woes can be one thing which we would like to watch out for another quarter, and then accordingly take a call. We don't want to jump the guns as of now and go by the management commentary, because most of the cases, if we talk about the other PSU space like PNB, SBI, so on and so forth, the management commentary has been pessimist, and they have been seeing pain going forward in coming quarters.
Say even if we were to say that the worst is behind, at 140 rupees, if we assume that the worst is behind and things would look positive from here on, there is still a lot of upside. So you would want to wait and watch for the results to catch the other upside and not play this 20-30 rupees extra?
Yes, I would like to wait for the results to come in, to be more confident about the management, whatever they have spoken in Q3, and to be more confident on the numbers henceforth, because I may chase the stock 5 to 10% up on the higher end, rather than seeing 20% downside from here on, because I would like to be wait and watch in Bank of Baroda case as well as other PSU space.
Right. Something like a Tata Motors which delivered a numbers, or maybe the Pharma Pack which delivered a numbers. There also we have seen a correction. Numbers were decent, and it has not led to very major downgrades. You think that's a better space to be in?
Yes, pharma is definitely a better space to be in. If we talk about Sun Pharma's numbers, I think the PAT was extraordinary well. It was beating all the expectations which was there in the consensus. On top of it, if we talk about the synergies, I think slowly, steadily the synergies between Ranbaxy and Sun Pharma is working out. Even they're trying for the re-inspection of Halol plant somewhere in 2-3 months down the line. I think more or less things are getting in place for Sun Pharma. We believe there are a lot of APIs in the pipeline. We may see some good ANDAs coming in the company. Even few of the filings which they have got cleared, like Clevec in US. I think those would be a star product for Sun Pharma going forward. So if a pharma altogether, Sun Pharma, if we talk about Midcaps, Aurobindo, I think these plays will definitely be the flavor going forward also.
Right. Siddharth, just stay on with us. About a minute remaining for closing. 72 points higher. Tata Motors on your screen, 3.5% higher. BHEL 105, 106. ITC up 1.8. Tata Steel up close to 3%, 252. Adani Ports up 6%, 212. Tata Power flat with a positive bias. ONGC flat, almost 200 rupees. Power Grid 139. Bharti Airtel up 1.6%. Yes Bank down 1.8. Reliance up 2.8 odd percent. NDPC flat with a positive bias. Kane India up about 0.5%. Z Entertainment up about 2%, 370. Idea Cellular up 2.8%. Coal India flat with a negative bias, 1.6% down. L&T 1,125, 2% higher. HDFC up 0.25%. Infosys up 1.5%. BPCL up 4%, almost ending at the day's high. Cipla down about 0.75. HDFC Bank down up about 0.5%. Lupin 1,729, 1.2% decline. GAIL flat, absolutely flat for GAIL. That's the closing bell. HCL Tech 826. They are looking for a share sale, but the good part is that markets markets have recovered from the day's low, and we have closed at the day's high. 72 points higher, 7,120, and that probably can just tell us that maybe there is some amount of fight that the bulls are giving to the bears. Bank of Baroda 7% higher, the top gainer, no surprise, 140. That was the price on Monday as well. Adani Ports 212, 5.8% higher rather for Adani Ports. 6.5 million shares traded. Dr. Reddy's up about 4%. Dr. Reddy's was a 230 factor stock. It of course declared numbers during market hours. Vedanta 4% higher, 74.3 as far as Vedanta is concerned. Sun Pharma up about 3.6 odd percent, 858 for Sun Pharma. BPCL 4% higher, 782 for BPCL. From morning, it was looking decently strong. Tata Motors 312, 3.6% higher, 312 for that name. Idea Cellular 3% higher, 108, 109 for Idea Cellular. 2.6 million shares are traded for that name. But again, Idea has been one of the big loser as well. Just Dial 18% higher, 526, maybe led by short covering, but it's really a big move that one is talking about. 18% higher. Adani Ports again. For days it has been doing well. Today up 5%, but before that for days it was a very big underperformer as well. 12 rupees higher for Adani Ports. Power Finance after the results clearly beaten down, one way on the lower side, 5.5% higher today. There is a sigh of relief coming into names like Power Finance and REC. Apollo Tyres 160 rupees, 5.5% higher for Apollo Tyres. So that's another name which has did well after results and continue to do well. HDIL up closer to about 4 odd percent. We were talking to Siddharth. He's still with us. Siddharth, names which gave good numbers are the ones that one should own into these space, because that's the first names that will attract buying.
That's absolutely correct, because rather than running after the revival story, I think the growth stories remains the best flavor of the market, despite the valuations being steep in some of the places. But I think market participants are chasing the growth stories. If we talk about some of the good numbers in the market, if in the consumption space there are few, like in discretionary space as well as in non-discretionary space, staples have good numbers altogether. Some of the few pockets in the automobile sector also have performed really good if we talk about some of the CV spaces. So I would believe that growth stories would definitely keep on performing rather than jumping on the revival story.
Right. Something like a ICICI Bank, we spoke about PSUs in detail. You think ICICI Bank is now factoring in valuations that, a lot of its book would go bad? It is already in the price?
A lot of things are in their price. I think a lot of discounting has been already done. But the kind of commentary, because I think what market is looking at, not only numbers, I think the future commentary of the management and the body language is what market is observing too closely. Looking at that, what we believe is there is asset quality pressures coming forward again in few quarters to come by. And on top of it, the steel sector, the power sector, infrastructure, again, I think some few pockets would be really painful in the bank, in the books. So looking at that, fresh slippages can be one of the things which we would like to look on in ICICI. So I would like to say that in the banking space, in the private banking space, we would like to stick to the retail banking space likes of HDFC Bank, IndusInd Bank, where the expectations are quite good, and one is looking at the numbers. I think numbers are quite good in terms of interest margins, in terms of NII. Talk any number.
Right. Just Al, what would be your view? It's half from where it was. You think it's worth having a look, or in e-commerce things can really go bad quite fast?
See, we all know there is a disruptive force in all industries, but in e-commerce industry especially, we believe disruptive force is quite strong and quite fragile. So looking at that, what we believe is Just Dial has a lot of competitions in front of them as of now. Looking at the valuations, we are not that comfortable. Hence, we would not be able to give any kind of a recommendation on the story because we don't cover. But what we believe is valuations are quite steep. I think it's better to be away.
Right. As far as tire names are concerned, after Apollo Tyres, CEAT declared numbers, both these names have done well. You think Tire would continue to do well because crude being lower, autos doing decently well, as well as the replacement demand coming in for this space?
Yes, absolutely, because replacement demand is one of the factors which is driving the entire tire space, with the rubber prices being at a low level. On top of it, if we talk about the global rubber prices are quite muted, but hence because of some of the notifications given by government, Indian tire companies has to procure raw material from Kerala also, where the farmers, where we have quite a good abundant growth of rubber. So all in all, tire rubber prices are low, input prices are low. I think companies are doing fairly good because of the replacement market. OEMs are doing good, but with a caveat, Chinese dumping has been a issue for entire industry. I think slowly, steadily.
But still, it's not like steel, or a dumping issue like steel, because CEAT does have a brand recall, Apollo Tyres does have a brand recall, so it's not exactly the problem that steel companies were facing.
See, we are not talking about entirely passenger vehicle segment, because in the passenger vehicle segment, brand visibility and the awareness is very important, where these companies are doing fairly good. But if we talk about the CV cycles, where I don't think brand makes much of a difference, I think quality will make a difference. If the quality is the same with the lower prices, right, I think there the Chinese companies have an edge, and right, there the Indian tire companies are feeling the heat. So looking at that, right, I think once going forward, they will cope up with the things, and tire companies altogether valuation wise are quite a fit.